Hey guys, what's up? Hope you guys are having a great day today. My name is Matthew Spazzini here with New Millennium Wealth. Happy Tuesday. Hope you guys are having a great week and everything. So, I wanted to kind of come in and talk about just a particular pattern that occurs in the markets from time to time that I just absolutely hate. They're called complex pullbacks. Guys, complex pullbacks are a form of retracements that occur in the markets, and they're absolutely a pain to have to deal with. You know, you can have a 2 drives, a 3 drives complex pullback, and they're just, when you're trading a trend continuation strategy or maybe even a trend following strategy like I am, sometimes it's difficult because you don't really know what the market is doing, and I'll explain that here in a couple minutes. So here we are, we're on the Aussie yen. I actually found several complex pullbacks here for you guys to give you a good example of what I'm talking about, and I will show you the difficulty of the complex pullback and overall how you can handle them, what are the different ways that you can handle them, and just kind of offer you guys the ability to share my pain. These things are like literally my bane. I hate when these things happen. So here's why. Okay, so we have this initial high up here. Well, actually, we have an initial low. Let's do it like this. We have an initial low here, an initial high, a retracement, and then a new structure high. And then we have another retracement, and then we get a retest of the highs, or at least we try to get up there. We don't quite get up there, and then we roll over and we retrace again. And then we rally and we make a new high. Now, this really sucks for someone like me because a lot of times I'm trying to, trade trend continuation strategies, right? That's what I try to do. I have a trend continuation strategy, and I'm looking for the market to ultimately break out, make a new high, and then come back in, retrace to a 618 fib retracement level so I can get long or short depending on the direction of the market. Now, sometimes complex pullbacks actually end up helping me and work in my favor. As you can see here, this one clearly did. That we didn't really quite get down low enough here, but then eventually we got down low enough here for me to get involved, and then we rallied. So with this particular complex pullback, it would have worked in my favor. However, a lot of times they don't necessarily work that way. The only reason it worked this way is because this was a pretty big extension, and we needed a larger pullback. But what if we had a short extension like right here? Well, if this was all the market did and we rallied up here, eventually I would have gotten, if it had rallied even more, I would have eventually made money. It would have gotten all the way up, would have made money, would have been a successful trade. However, unfortunately, it didn't do that. It got rejected, and then it rolled over again. So what would I have done? So if I had measured not from here, if I had measured from here, okay, this is where I measured from. My stop loss is 10 pips below the low, so 85.6 is what we're looking for. I'm not really seeing. Actually, it's 83 right there. So this is what we're looking at right here. We need to place an entry. Entries right here. Good deal. And then we need to place a target, which is right here. So on the plus side, we ended up getting involved, but then we come down here, we almost get stopped out. We look like we're going to rally, and we're looking like we're actually going to make money. This is the most exciting thing. We even come up, we're a few pips off, and then we fall, and then we end up closing below, and I end up losing money. So automatically, I thought I was going to make money. I was getting excited. Then I ended up losing money. But because we closed below, I'm going to go ahead and take my fib retracement tool, and I'm going to assume that, let's go ahead and actually reduce these lines here so I can see what's going on in the top right here. Okay, now I'm going to flip my, Now I'm going to go ahead and flip my analysis. Now I'm going to start to assume that the market is going down because we had a break below, a close below. This indicates the market tends to go low, or at least there is a possibility that it does. So we'll put our entry on the 618 fib retracement. We will place our stop loss 10 pips above the highs, so we're looking at 37.5 and 37.3. That's close enough. And then our target is down here at 64.61. Okay, now Well, what now we have to look and see what happens. See, this is the problem that complex pullbacks create. All right. So do we, first and foremost, we got to get involved. Okay, so now we're involved in the trade. So now I'm hoping that we're going to go ahead and rally. So as you can see here, we've been bearish for quite some time. So I'm thinking maybe this is just a short-term, this little bullish trend here was a short-term retracement. Hopefully it's going to roll over, and this is the extent of this retracement. I mean, overarching trend is clearly bearish. So let's hope that this is just a small bullish retracement and we'll get back to the bearish trend here. Is that actually going to happen? Well, let's find out. Clearly, I mean, we already knew because we saw it, but no, it's not. We're gonna end up getting stopped out here. So, and this is the difficulty with my trading strategy. This is what happens. Again, because this was a long extension and we didn't really have a big retracement in here, I naturally would have looked to here or here for my 618 fib measurement. All right. Just out of curiosity, let's see something real quick. Would we still have? Oh yeah, we still would have gotten involved even if I had measured it from there. So this is the problem here. If I had had a shorter extension where we extended, retraced, had a significant retracement, and then another extension, I would have drawn my fib retracement tool from that smaller mid retracement point. And if I had done that small mid structure level, it was more of a minor structure level, then in reality, this complex pullback would have destroyed me. Not only would I have taken a loss by getting involved in it, but then because of the second drives of the complex pullback, but I also would have taken a secondary loss because I tried to flip my analysis, assuming that the market was going to continue its bearish trend, the overarching bearish trend that we have. Now, we are clearly bullish. I mean, if you look here, the chart is going from the bottom left to the top right. That is absolutely a bullish signal. What I'm saying is overall, the overarching trade, the long-term overarching trade has been bearish. We've been moving from the top left to the bottom right. Okay? So that's what I'm saying. That is a overarching bearish trend, but we are in a bullish trend currently. Now, is this a full-on reversal? Are we going to be in a bullish trend for several years? Or is it just going to be a short-term, bullish trend / retracement in the overarching bearish trend? And nobody knows. It's just something that you kind of have to wait and see. You won't know until after it happens. So that's just kind of the way the cookie crumbles. But this is what we call a complex pullback. Extension, retest, and then another extension. I mean, it's a big retracement, or it can be a big retracement in the markets, but it's a two drives complex pullback, and they're very, very, very difficult to handle. Now, here's one way that you could handle them. The first way that you could handle a two drives complex pullback, and sometimes you can have three drives, but the way that you could handle it is you could try to take the trade here. So let's assume that this was my trading strategy, and I was going to, let's say that this was what happened, right? And then we rallied. Let's kind of fatten these up so you guys can see them a bit better here. Okay, so let's assume this is actually what happened. Ignore all this, right? Let's assume that this happened. And let's draw it from here. Okay? Actually, we want this to be here because, again, we're going to have to take a loss on it, right? So let's assume we had a much larger retracement, but was no less unsuccessful here. Let's assume that I measured from here to here, and we still ended up, getting stopped out because of the second drives. How could we potentially handle this particular move? Well, for starters, we can take a second trade. We could say, well, I measured from this structure low, swung high, swing low to swing high, to this structure high up here. And I measured from here. I got my fib retracement level right here, my entry, and we got stopped out. So what I could say, the next thing that I could do is I could say, okay, I'm actually going to measure from down here now. And I'm going to take this trade. So I measured it. I had the first shot, didn't work. The second shot, this could absolutely work. Okay? And we get long here. Let's go ahead and put the yellow entry line on. And we can try to wait and hold out for a bullish pattern or something of that nature, and we can, more or less make it work that way. So you can try to take, you can take, let's just assume it's right down there. So you could take two separate trades. You can try your luck with the first retracement. That one doesn't work. Try your luck with the second retracement. Another thing you could do, which is what I did, was you can try your luck with the first retracement, and if it doesn't work out and we end up breaking below, you could, because you don't know this is a complex pullback when it's happening, right? You have no idea that's what's actually occurring. All you know is that we broke structure to the downside and that we've been overarching bearish for a long, long time. So what you could do is do what I did, and you could flip your analysis and say, okay, well, since we broke to the downside, I'm thinking that this might actually be reversing. I'm going to flip my analysis, and I'm actually going to short the market. If it comes up here, I'm actually going to short the market, and I'm going to wait for the market to go down. That is absolutely the secondary option that you could choose to do. And if it does that, you can end up making money. And I will say, sometimes that does work. Now, as to which strategy on handling this you want to go with, I don't really know how consistent either one is. I don't know if one is better than the other. Another thing you could do is, because you lost out on the first trade, you could just say, okay, I'm going to sit on my hands and wait, because I'll be honest, I don't really know what's going on. I don't know whether, I'm seeing that we had all this bullish momentum here. It was quite large, and now I just got stopped out and it closed to the downside. Is this going to continue the overarching bearish trend that we've been on for a long time? Let's actually see, how long have we been on this bearish trend for? I'm going to say, let's assume that, okay, it looks like it was bullish right here. Okay, I'm not going to look, I'm going to say it started here. So this clearly was in 2019. And we are now in March of 2020. So, we haven't quite been in this bearish trend for a year yet, on the hourly chart at least. We haven't quite been in there just yet. Let's actually look on the daily. So as you can see here, look at this. We've been on the bearish trend since 2017, so for 3 years. Actually, even longer than that, because it goes all the way back here, so 2014, so for 6 years. And we had a bullish trend here from 2016 to 2018, or, 2017, so for about a year. So clearly, yes, right now we are going up, but are we going to continue higher? I really don't know. So, and that's the main question that we have here, is we don't really know what is exactly going to happen. We've had a very, very long bearish trend for a long time, where we've had some retracements that took a year or two to work out, and they were bullish. So we had tiny bullish trends that were acting as retracements inside of a very large bearish trend. So the question is the bearish trend continuing, or are we going higher? Well, when you're in the moment, like I said, you don't really know. So what you could do is that, because your initial trade didn't work out, you could say, okay, I don't really want to try to trade this again, so I'm going to not trade this. I'm going to wait and see what happens. And you can, and if you did that, you could clearly see, okay, well, we finally broke structure to the upside. Now I'm going to look for a retracement back down here, somewhere in this area. And that could give me a long position. So we now know that we're still bullish, and that gives us a good identification and some confidence into the direction of the actual that the market wants to go in. Now, another thing you could also say is, you could just say that I'm not going to measure my fib retracement tool and take trades from the minor middle structure levels here. And that is one thing you could also do. You don't necessarily have to take trades like the example I gave you. You could have taken the trade from the very end here, and that would have worked out. But that also isn't always foolproof. So don't think that that's a guarantee, because, well, as in trading, nothing is. But let's actually see what happens here. Obviously we know we go higher, but do we get any more complex pullbacks? So we have our first retracement. So let's go ahead and I can already tell you this is not going to go well, but let's do this. Measure from the swing low to the swing high right here. All right, entry levels right here. Target. Whoops, wrong color. It doesn't have to be precise. It's not like we're actually taking this trade live. So right there, and then our stop loss is going to be a little under here. So let's do 68.34. So we're at 68.24. Okay, 68.24. Good. Now, as you can see, we're already not looking good at this point. We retraced. We came back up, got rejected, and we retraced again. Boom. Got stopped out. That is the crappy part about this. Now, what can I do? Well, I also see that we have minor structure here and here. I think that because this retracement was bigger, this is the bigger retracement level. So I could theoretically, now this makes me nervous because I'm going to be honest with you, if you look right here, this is really where the trend started. So what I would really like to do is place my trade all the way back here. Place this fib retracement tool, and I'd like to get a fib retracement of a 618 all the way back here. But seeing as which this is a very, very strong trend, we're not really getting very deep, big retracements. That's unlikely to happen. So it could happen, but it's unlikely. And if it does happen, if it does retrace all the way down there, this could be a very, very clear, this could be a reversal. I mean, we could be reversing from the bullish trade, and we could be continuing the overarching bearish trend. So it could be reversing the bullish trend / retracement, and it could be continuing the overarching bearish trend. So it would make me nervous if we got all the way down to the 618 Fibonacci retracement level, because that would be a bit unusual. Not that it hasn't happened, it just, this is a big trade. If you enter here, you got your stop loss down here somewhere, probably somewhere around here, and your target up here, you tend to make a lot of money, or you stand to make a lot of money potentially, but you also stand to lose a ton of money as well. So I like to take these smaller trades like this. So I would go ahead and measure my fib retracement tool here and see if we get a 618 fib retracement, and let's see what happens. We got close. We got pretty close, but we didn't actually hit it. Nope. And we ended up rallying. Let's see. Oh. Aha. Here we are. So we got long. Now I have no idea what's going to happen. I mean, I know that we are eventually going to go higher here. So this is actually, let's before I say it, let me count it. But I think this is a 3 drives complex pullback, which is awesome. 66, 36, 36. Okay, right there. Okay, so let's actually see what happens here. I think this is a 3 drive. So we had our first retracement, retest, second retracement. Well, actually, really more. The first, the second came up here, had a third. So yeah, this is a complex pullback. It's a little ugly because the first one was a very, very small one, and some people might just say that was more of a blip in the market, and that in reality the market could have, that this was the first one and then this was the second one. So it kind of depends on your point of view. Okay, you could say that this is a 3 drives complex pullback, and I would probably agree with you that it's really more. I don't think I would agree that it was a 3 drives. I think it's more of a 2 drives. 1, 2. This right here was really more a mistake that I made. I took this trade thinking that maybe we were going to take had a chance to make a little bit of money because it was a small trade and things of that nature. So this really would have been more of a mistake on my end, that this is just more of a blip in the market type of thing. And I was just hoping that maybe we had a very tiny retracement and then we were off to the races, right? But that didn't actually happen. So I would say this is a 2 drives complex pullback, because the 3 drives would have looked like this. 1, 2, 3. Okay, this is what a 3 drives complex pullback would have looked like. If you connect all the dots here, you will easily be able to see exactly what I'm talking about. Okay, this is what it would have looked like. So this is very much a 3 drives complex pullback. 1, 2, 3. Okay, normally it's not gonna be a tiny little thing like a small little retracement, retest, small, and a big retracement, and then another big retracement. Usually it's going to be a big one, and a big one. These are also called harmonic movements. When the movements are the same in terms of the length, they are called harmonic movements. You can have these harmonic movements inside of the markets and inside of these complex pullback retracements. You can also have an ABCD pattern, which is a harmonic movement, where you have A to B, B to C, and then C to D. So a complex pullback, or you could also have it with regards to a bullish trend. So we have A is down here, B is here, C is here, and D is here. You have A to B, B to C, C to D. And you can actually trade these. So this move is the same size as this move. Now let's actually see. It may not be, but let's actually see real quick. Oh, no. No, it's definitely not. It's definitely not the same. Initially, it looked like it was, but no. I don't think so. No, you see, this one move right here was, in fact, a little higher than this one. So, but you guys get the idea, right? That's generally speaking what a ABCD pattern is. That's what a harmonic movement is. It's the same measurement of a move. But either way, if you had traded this, at least, well, you probably could say that this was an ABCD pattern. You would just say that it didn't really complete all the way up here. But if you had taken a trade here and then you would use, like, say, a fib, you don't actually see me do this very often, but use a fib extension tool. So, like this. And you had actually placed your trade, and you had let's say you had a target here. I know I'm getting distracted, guys. I'm so sorry. I'm sorry. I'm always getting distracted with this kind of stuff. It's just fun. You can tell I have a passion for this, right? You could take one target there. You could take a secondary target here. Heck, you could even take a third target here. Okay. So so right here you would get involved. I guess you would go ahead and get involved at a 382 fib retracement level right here. Oh, it may not have even hit the 382. You know, I don't think it actually hit the 382, but let's assume it did. Let's assume it did hit the 382 retracement. So we get involved at 382 retracement level, and we're going to have our initial target here. If we hit this, we're going to roll stops to break even, and then we're going to hit this. And then we hit the secondary target, and then we could either take another position off if this is going to be a 3-position move, or I don't know. You kind of get the idea, right? You can absolutely trade harmonic movements that are in the markets. You know, you could totally do that. So that being said, though, let's look at this. What happened with our 2 drives complex pullback? Well, we know it goes higher, so we know it's a winner, right? I mean, that was obvious. And we went higher. But again, another example of a complex pullback. And this is a great example because let's assume I never took this tiny little trade here. Let's assume that I actually was more reasonable and I took more the middle trade from the middle minor structure level. We would have gotten stopped out, wouldn't we? We would have came down, we would have come up here, got rejected, and then we would have gotten stopped out of this trade. So then we have a couple options. Like I said, we can either sit on our hands and wait for confirmation of the trend. We can take a whack at it, which is something that I like to do. Something that I do is sometimes I actually like to take a second whack at it, right? I like to take a secondary trade like this and say, okay, you know, I'm going to go ahead and take a second try. Or sometimes I also like to reverse my analysis and assume that maybe we're going to head lower, and I like to take that shot and see what happens. And that's kind of how you could do it. Again, here is another example of a really big complex pullback right here. A 2 drives complex pullback, first drive, second drive. Now, if you had measured from the middle point here, you would have gotten stopped out. But if you had tried a second time here, which this would have been a very big trade, probably well above my risk tolerance, you would have made money, but you would have had to take a lot of risk. Honestly, in this one, because actually, let's actually find out. Let's see here. All right, so we have our entry level here. And then where's our stop loss? We're going to do the math real quick. I was about to say sometime. 67.19.3. That's what we're looking for. 19.2, close enough. Okay. Now give me 1 minute. All right, here we go. I actually pulled all this up, did the calculation so you guys didn't have to watch it. It was 120 pips, so yeah, we totally could have taken this trade. We absolutely could have. And we would have made a fair amount of moolah, right? So I'll actually do this real quick. Give me a minute. Okay, so we actually stand to make $161, and we're risking $130. So that's the kind of risk-reward ratio we have here. We're definitely risking less, and we stand to make more. And as you can see, it's an easy, decision when you know you're going to win. But we have confirmation bias because we can actually see this. Now let's look at this particular strategy up here. Did we? Well, no, that doesn't count. I was going to say this is another complex pullback here, but this doesn't really count because we actually didn't make a new high. Let's see what happens. See, this was not a complex pullback. If you had measured from here, you never would have gotten involved. If you measured from here, you never would have gotten involved. Again, yeah, you would have had to have measured from this tiny little blip in the market here, and I just don't feel comfortable doing that. But if you did, you would have actually made money. So you guys kind of get the idea, right? I hope I explained that pretty well. I really hope I did. I mean, right here, we have a complex pullback right here. Retracement, retest. We didn't really retest, but we kind of had a retracement. We kind of came up, and then we had a retracement again. So definitely complex pullback. And now look, now we're kind of stair-stepping our way back up. Now, there is a good chance here that we're going to continue higher. So what we could do, and since this is live data, I might actually post this trade, assuming that we actually get involved. Let's do this. So you guys are actually going to get to see this play out live. It's always fun when that happens. Okay, so unfortunately, because we found this on this particular pattern here, we're going to have to wait and see what happens with this trade. If this right here, if this actually gets all the way up here, and what we can do is we can actually place a blue line right where price is currently sitting at, make it a nice dotted line, and fatten this line up. Let's go ahead and fatten this line up right here. So what we could do is we could do this. So we already know where the current price is. We already know where we found this. If the market comes down here and closes anywhere below this blue line and it actually retouches this yellow line, we can go ahead and we can say that we got involved in this trade. And that would be cool. And then we can ride the wave back up. Hopefully we can ride the wave back up again. Assuming that this is actually going to ride the wave back up. Because we had a complex pullback, this could simply just be retracing and it could continue to go lower. You never know. You never know. No one has a crystal ball when it comes to trading, right? I say that all the time because it's incredibly important that you understand that. Nobody has a crystal ball. Nobody does. So you don't ever really know exactly what's going on. No matter how much work you do, and eventually you do grow an eye to recognize a lot of things, but you still don't always know. So anyways, guys, I hope you enjoyed that. Those are the 3 different ways that you can handle a complex pullback. You can either take your first shot. If it doesn't work out, sit on your hands and wait for confirmation of the trend. You could take that first shot again, and if it doesn't work out, take the second shot if it's because of the 2 drives complex pullback pattern. Or if your first shot doesn't work out, flip your analysis and try with the second shot. Now, clearly, none of the examples I showed you today show that happens as often, right? Flipping your analysis doesn't always occur. And so I'm not saying don't do it. I'm just saying be mindful that if you do flip your analysis and you do try that, just make sure you test it. Don't trade any of this just out of hand without testing. Make sure you do the work. Make sure you do the testing. All right, guys. Well, hey, I hope you enjoyed the video. Make sure to like the video, subscribe to the channel, and don't forget to check out the website at newmillenniumwealth.com. Also, don't forget to check out TradingView. TradingView is an affiliate program that I'm subscribed with, and they're absolutely amazing. It's a great charting platform. It's dirt cheap to have a paid account. It's really, really good stuff, guys. So consider checking out TradingView. And also on top of that, if you guys want to learn the skill of trading, go check out Tier 1 Trading. I'll list both the links in the description below. Tier 1 Trading is an absolutely amazing place where you can learn the art and the skill of trading. They're not just going to teach you a pattern and a strategy. They're going to teach you how to create your own strategy, how to verify your strategy, how to exponentially grow your trading account with money management after you've done all the back testing, the trading plans, and after you've done everything that you're going to do. It's actually really cool, guys. It's like the bread and butter of most traders. Money management is what helps you determine when you increase position size and when you decrease position size. But guys, it's absolutely amazing. Go check them out. You're not going to go wrong. All right, if you guys will do all that for me, I'll see you guys in the next episode. As always, know the risks, plan accordingly, and have a great day.